with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Economic issues are a focal point for China's national legislators and political advisors during this year's two sessions. China has set an economic growth target of around 5% for this year. Premier Li Qiang announced the figure in his government work report at the opening session of the National People's Congress. He said in setting the growth target, the Chinese government has considered the need to boost employment and incomes while also preventing and diffusing risks. The premier also highlighted efforts to deepen reform and opening up, as well as to boost internal momentum for development. So what message have been sent from this year's two sessions, and how will they shape China's economic future? For more on this, join us on the line now are Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, Liu Baocheng, Professor with the University of International Business and Economics, and also Yan Liang, Professor of Economics, Willamette University. So, Baocheng, I will start with you. China's economic growth target for this year is set at around 5%. This is similar to last year. And some people say it's ambitious but achievable. So what are your thoughts?
I think this is correct, because regressionally over the past years, China achieved far more than that. And collectively, if you read the Congress report from the local governments, and they really add up to be around 6%. So realistically, it is really achievable. And given last year, that was also a very difficult year, we achieved 5.2%. And this way, we are able to maneuver in a holistic approach in building the balanced growth between economy and social welfare, and also for the transformation towards the green economy and also high quality growth. So I should say this is a reasonable figure, although it sounds a little ambitious given it is one of the largest economy as compared with the developed countries where their GDP growth rate is around half of the entire Chinese target.
Mm-hmm. And Jiahe, so what do you make of this GDP target?
Personally, I think this 5% is actually a bit, conservative when they're setting up the target. It's very possible that we see the GDP, final data of the GDP growth rate to be, well, personally, I think it will be around 6 or 7%. The government sets a target doesn't mean that the GDP growth rate has to be this figure, because if we look at the GDP growth rate of last year, we got 5.2%, and that was achieved amid many difficulties. The first is that the global trading environment was not very positive. You see, trading disputes around the world, and the economic growth rate is slowing down Europe as well. And the second is that China was just working out of the COVID in the first quarter, and we have saw the economic growth rate in the first quarter was not very strong at all. And finally, there was the real estate market that was cooling down back in 2023. So we got these three difficulties, and economic growth rate was still 5.2%. And this year, if you look at all three factors, the global trade is actually, we don't know whether it will be better compared with last year, but probably will not be worse. And the war in Europe has been ongoing for over 2 years and is possibly ending or close to ending. Who knows? So the situation might turn out to be good for this. And the COVID is long gone, so this factor is turning out to be positive. And if you look at the real estate sector, is that it's been cool enough last year, so possibly this year we will have a better real estate market compared with last year. And if you look at the competitiveness of many of China's industries, like especially the new energy, the new energy vehicle, the battery, the wind power, all these things, they are growing to be more and more competitive in the global market. So it's very possible this year that this year we will have a growth rate that is higher than last year. And last year we got 5.2%. So it's possible that we see a 6 to 7% this year.
So yeah, so some people like Jia He are more bullish on Chinese economy, predicting growth of around 6 or 7%. But in aiming for a 5%, the government has noted challenges in the economy, in the property sector, and other areas. So in his government work report, the premier also pointed out uncertainties in China's economy and also in the global arena. So what do you think are uncertainties or challenges that Chinese economy face this year?
Right. So I think Jia He is correct in some sense that, in terms of external environment, last year, WTO, the estimate is the trade has gone down by 5%, but they're forecasting this year trade will grow by 3%. So if that turns out to be correct, then we do have, a better trading environment. That said, I think still the 5.2% last year's growth was on a very low base from the previous year. In 2022, the growth rate was only 3%. So, when you have a low growth rate, it's easier to grow faster. But when the growth rate is already 5.2% last year, then this year, if you want to grow another 5%, that would be relatively more challenging. But I also agree, I think in terms of housing market, it stabilizes somewhat. So it's probably going to be less of a drag on the economy. And then you have these new growth engine that are solidifying. In terms of the external pressures, I would say, it's still hard to tell. The Russia-Ukraine conflict will come to an end. And also, what's happening in the Middle East could, come to a peaceful resolution. But still, I think those are still really big unknowns. And at the same time, we know the U.S. is coming up with the presidential election, and they will start talking more tough about, dealing with China. There are all these other, sort of risks. And one last thing is also, with China's exports of new energy vehicles and some other higher value-added technological intensive products, I think the West would start to push back. Not to mention the continuous ban on high-tech exports to China, which I think, in the short term could still be a barrier for China's technological innovation and growth, even though in the long term, I think it definitely helped mobilize all society efforts to leapfrog in technological development. So I think, there's still all these different uncertainties. Let's not also forget about, the Fed's policies in some great extent would also affect investors' actions. So I think there are still quite a bit of uncertainties that we need to deal with and be cautious about.
So Jia He, so you are optimistic about China's economy, and of course there are reasons for your optimism. Obviously, what we saw over the Spring Festival holiday, with the tourism number, the consumption numbers really boost the confidence at the start of this year. So what will the government do to continue boosting the overall confidence level?
Well, I think if you look at the future of the Chinese economy, one data given in the sessions held these days actually draw my attention. They said that the current per capita GDP of China is only around 1/6 of the United States, and they compared the historical period of South Korea and Japan when they were their economy were actually working at 1/6 of the U.S. economy for the per capita GDP back in the history. Their growth rate has been lasted for decades. So that actually tells you the growth potential of China is going to be continuing in the next few decades. I mean, at least you can see it for 2 decades, and that's long enough for me. Personally, I'm an investor, so we look for like 1 decade or 2. So you can definitely look forward for the Chinese economic growth. And if you talk about what the government is doing or will be doing, is that currently, if you look at the Chinese government, it's actually a very active government in leading and guiding and planning for the economy. And that's very useful if you want the economic growth to be passing the threshold of what we call the middle income trap, which is around 10,000 USD per capita. It's very important that you have an able government, you have an effective government. And if you look at what Chinese government has been doing in the past many years, they have been trying to curb the real estate bubble ever since 2015. So that's about 9 years ago. They started to realize that the real estate is way too expensive, and they want to contain this. And they started boosting the new energy sector back about 1 decade ago. So currently, if you look at the new energy vehicle of China, it's actually leading the global industrial chain. And this is very good for China's urban environment. And if you look at the consumption, the government has been trying to boost the consumption in the past few years, and that gave a lot of confidence to the economic growth.
So for the private sector, a lot of people say it's really about confidence building. So what measures can be taken, do you think, to help support the business and the private investors in China? And what role does the private sector play in innovation, in jobs and livelihoods?
Right. So I very much agree with Jiahe. I think, the very active and instrumental role the Chinese government plays is really, indispensable, I think, for China to continue to grow. Jiahe mentioned all these developmental gap. I think in economics, we tend to caution against this idea of the natural growth or convergence. When we look at 2010s, about 67% of the countries that are in the middle income, they got trapped within it, right? So it's difficult for country to move up, even if they do have the growth potential, which means we do need the government to play a very important role in helping countries to graduate out of the middle income trap. So what can the government do? So you asked about the confidence. I think there are multiple dimensions the government can do. For one is the Chinese government has been invested heavily in R&D, in research. The public investment in R&D, has increased by 10% last year, which is greatly helping, the private enterprises because, a lot of these basic research is done at the governmental level that lay the foundation for private enterprises to profit from, commercializing these technologies. On the other hand, I think there's also many other policy that the government puts out, for example, by making finance accessible, right, the credit accessible for private enterprises. That's also super important. And finally, I also think that sometimes to restore confidence does take time, even though the government has been put up these fiscal stimulus, monetary, liquidity support. It still takes some time for business to see, their improvements, and we start to see that. I think starting last year, third quarter, the business inventory starts to hit the bottom, and we also start to see the large scale businesses start to have positive growth on their profits. So I think all of these are very important to boost the business confidence, right? I think businesses would need to see the tangible improvements on their balance sheets, and I think that is happening. And finally, I think, with a lot of this consumption support, that indirectly, I think, would also boost the business confidence, right? Because they do want to see the kinds of consumer spending that would allow them to be willing to expand. And last but not the least, I think the pledge for stable and transparent policy environment, I think that is also very important in boosting enterprises' confidence. So I think, the government is doing on all these different fronts to boost the confidence. And I think we're going to see the effects.
So, Baocheng, actually, Yan mentioned R&D, and the government emphasized the new quality productive forces in its government work report. So what is your understanding of this new direction? Are we going to see more investment in science and technology, innovation, the R&D, and how critical is it now for our economy?
China is now in a rapid but also a very painful transformation from the labor-intensive and resource-intensive type of industry into a green development and innovation-intensive operation. The reason I'm saying that it is important because there is no other way to address the critical competition going on in the world, because China is heading into the frontier of technology innovation, where stranglehold is also being felt in terms of the technological embargo with China. So therefore, they have to step up their indigenous innovation. And the other is that to strike a balance between economic growth versus environmental quality and social support. That also needs a lot more public education, and particularly now when we are facing the challenge of unemployment, particularly along the younger generation, and this is something we need to address. We are able to move more smoothly towards the target of high quality growth.
So what is your understanding of this new direction, the new quality productive forces?
Right. So I think what the government is really trying to do is to promote, these technological innovations in some of the emerging industries, and also trying to translate that, leading technology industries into a higher productivity growth. So sort of like the total factor productivity, that's essentially what I think the government tries to do. And as they also mentioned, we wanted to boost the data, for example, as a very essential input in the production. So some of these emerging sort of technological sector would include, AI, all these Internet of Things, of course, new materials, new energies, and so on and so forth. So again, the idea is that we wanted to have these cutting edge technologies to lead these sectors. And yet we also wanted to make sure that, the technological developments in these sectors can be in a way applied and spill over to other sectors. So it will be able to boost, the total productivities, and therefore that would help to drive, more sustainable growth. And that would also be able to translate into higher productivity and higher wages, higher demand, to have a sort of virtuous cycle. And I agree with, Professor Liu. In addition to the technological improvements, there are also a lot of other improvements in the organizational structures and so on and so forth. And I think that is also very important. The government talked about issuing the long-term, ultra long-term bonds to support this kinds of scientific innovations, urban development, and food and energy securities. So I think this is really a holistic approach, right? It's not just the development on these strategic sectors, but also enhancing security capabilities in the key areas. So I think in terms of this new, not only is about higher productivity, but also about higher level of security, and also, really more widespread, I would say, benefits from these kinds of technological innovations.
So, Jiahe, this is the first time that we heard this AI Plus initiative in the government work reports. So, which industries in China will, immediately feel the impact or have more potential for the AI applications?
Well, when we talk about AI applications, the most obvious one that's got the impact from the global AI industry, including the AI industry in China, would be connected with things like video production, which is for the short video and this kind of live streaming, and also for the film production. The AI is actually changing a lot. So in the past, we have to film every part of the film with the physical equipment, but in the future, AI will take a very large part of the work, and I don't think we can tell the difference between the AI work and the physical camera work. So that's something that is going to change the industry a lot. And also, if you look at the e-commerce industry, that's also changed very significantly. I mean, in the past, we just post stuff onto the website and then people go on and buy them, and we don't know who is actually wanting what. But now more and more AI programs are trying to anticipate that what stuff is wanted by which customer. So these kind of, currently, if you look at these programs, they are still in a very early stage, and you can feel sometimes you don't get the recommendation as you really want. But these programs are being updated day by day. So in the future, this will impact the e-commerce industry as well. So that's very, very large of the work. Also, if you go to the manufacturing factories, the artificial intelligence is helping the workers quite a lot. So it's much more work that was done by human beings, done by hands, material hands, is going to be replaced by AI. So these things are going to increase the efficiency of our factories by a very large extent.
And after talking about the tech innovation, I would also like to talk about China's fiscal and monetary policy this year to support the economic recovery. Some analysts outside China are calling for bigger stimulus measures, but China's monetary policy remains prudent and targeted. Actually, they are pretty gradual relative to other central banks. So why do Chinese policymakers believe that this is a more appropriate way for China's economy?
Yeah, that's a great question. I think for the Chinese policymakers, they're looking at the economy in a much longer term. So they're not looking at just the counter-cyclical policies, but they're also looking at cross-cyclical policies. In other words, we do not want to either overstimulate or understimulate just to fight the cycles. We need to take a longer term and look at not only the cyclical factors, but also structural factors. So I think in that sense, we do not want to just have the massive, what people call bazooka type of, fiscal stimulus, because you could, risk over-investing or overstimulating. And at the same time, I think, what is important is to really leverage your fiscal power to really mobilize, private resources, also making sure that your fiscal investment, public investment, is in the key sector that would help to really create the multiplier effects. So when we look at this year's stimulus, even though the headline deficit ratio to GDP is still kept at 3%, but once you count also, the local government's bond issuance, the ultra long 1 trillion central government treasury bond issuance, plus, the $500 billion bond issuance carried over from last year, we are looking at a augmented fiscal deficit to GDP ratio close to 6.9% or 7%. So I think that is on par with last year's level, and I think that is sufficient and effective for the fiscal stimulus. On the monetary side, I think you're also absolutely right. We have seen RRR cuts last year twice. We also see, the 5-year LPR rate cuts towards the end of the year. To stimulate housing market, to stabilize the housing market, I should say. And I think the point here again is we need to make sure the monetary policy provides sufficient liquidity to the economy, but at the same time we do not want to increase the interest differential between the Chinese interest rates and other countries, especially the US's interest rate, because that could depreciate the currency, that could create more financial instability in terms of, carry trade and financial outflows. So I think there are many considerations, both in terms of the cyclical factors, the structural factors, and also trying to balance different economic objectives. Do we want to just have, fast growth for 1 year, but without thinking about the quality and the structural transformation of the economy, or do we want to do it in a more, structural way? So I think all these would come to, these policy making decisions. And that's why I think we're looking at proactive fiscal policy, but not bazooka type of stimulus, and also prudent monetary policy.
So Baocheng, China said it aims to continue to deepen the reform and opening up. For example, all market access restrictions on foreign investment in manufacturing will be abolished, and access to the medical services and telecom services will improve. So what do you make of these moves?
If we really wanted to boost the quality productive forces, and that also needs to be matched by the superstructure in which the systematic opening towards the outside world and also domestic reform are there to have this type of support. So in that, the opening of the manufacturing sector towards the foreign investment is something that is a right decision, because the manufacturing sector in China is already strong enough, and therefore there is little infant industries that requires further the institutional protection. And the other is that China is boosting the real economy, in which the manufacturing sector is the mainstay. So the participation of global investment, and together with the global distribution channel, they brought forth. So this is something that's really helped to solidify the Chinese economic growth. And then the other is that because the manufacturing sector gives the ready employment to a larger number of population, and now we are also facing the employment pressure, and that also best fitted. And the other is that when we are further opening in the insurance market and financial market, etc., so that also requires the participation of a global financial market with China, so that we are able to utilize the two markets, two type of resources between China versus the rest of the world. So this requires a great vision, because when the protectionist sentiment around the world is going on in the name of national security, and that requires courage and vision, which I really gave a thumb up for the Chinese government.
So, Jiahe, so for China's capital markets or stock markets, what's your outlook for it? Morgan Stanley says global funds are returning to China's stocks. How do you see it, and what do you see as the opportunities for investors?
Well, I'm an investor myself, and I think my position actually tells my view. I'm almost 100% investing in both Asia and Hong Kong markets. So, it's like when you got all your money in the market, you are confident about that. And that's actually the lesson taught by the legendary investor, Warren Buffett and Charlie Munger and Peter Lynch, that you have to be fully investing in your country if you want to make an extraordinary long-term growth rate of your portfolio. The Chinese market has already been performing quite positively this year. If you look at the overall return of Shanghai Composite Index and Shanghai and Shenzhen 300 Index for this year, they have been rising about 3 to 4%. So if you look at the market, there have been opportunities. Well, the good thing is that the market hasn't been rising too much yet. It's only like 2 or 3%. And if you remember, the fundamental of the companies grow by about 10% every year. So that means the valuation remain almost unchanged for this year. So you still can grab a lot of good companies in this market. I mean, currently, if you look at the Shanghai market and the Hong Kong market, you can see many good companies trading at the PE ratio below 10 times. Currently, if you ask me to buy a company in China's capital market for a valuation above 10 times, I'll say that's way too expensive. So you can find like companies with 5 times or 6 times or even 3 to 4 times PE ratio. That's marvelous. And if you check out the fundamental of these companies, they're great. I mean, their profit has been continuing of the growth in the past 10 or 15 years. So why not invest in these companies? Yeah, they're marvelous opportunities.
Well, thank you, Chen Jiahe, Chief Investment Officer at Novem Archi Technologies, Liu Baocheng, Professor with the University of International Business and Economics, and also Yan Liang, Professor of Economics at Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.